You're listening to The Capital Table. Private capital markets have been evolving for many years, but never more so than in recent times. Take a seat at the Capital Table with leading experts discussing insights into the private equity and M&A worlds, and take away the knowledge you need to excel in a rapidly changing marketplace. We know this is one table you'll leave feeling full and satisfied.
Hi, everyone. Welcome to this episode of the Capital Table, part 2 in our series with our friends at Brown & Brown about relevant topics in cyber insurance. I'm Steve Brady, partner and market leader of transaction advisory at Withum, and pleased to have back with us Joe Ehrlich and John Kearns with Brown & Brown. So with that discussion, what is the current state of the RWI market when it comes to coverage for cyber? How willing are carriers to cover these risks? And, are there certain risks they look at differently than others? And what are the other important factors of the market today?
As you'd imagine, Steve, the way that carriers look at cyber coverage is going to vary depending on the industry. A web-based business that's collecting a lot of PII is going to be looked at very differently than a manufacturing company that may rely on systems as part of its work process, but they're not really maintaining a lot of PII, personally identifiable information, in their system. So the risk profile of those two is very different from each other. And insurers are going to look at those risks differently. They're going to have a much higher standard for a company where there is more risk, just as you would imagine. The good news is that right now, the market for coverage of the cyber rep, even in more challenging industries, typically is very good. Now, that's not to say all industries, and I'll come back to that in a second, but typically insurers are experiencing a moment of a lot of competition with each other. Right now, the number of transactions that are being completed is small relative to where we were, say, at the end of 2021, the beginning of 2022. So there's really a lot of competition among carriers for the deals that are out there. The result of that is a lot of good news for buyers of reps and warranties. Premiums are down, retentions are down, and coverage terms are broader than really we've ever seen them before, and that includes cyber. So one of the ways in which carriers historically have dealt with the higher risk areas is actually to essentially combine themselves with the cyber. And what I mean by that is there's a concept called excess and no broader. And that's where an insurer, a reps and warranties insurer, will say, yes, we will cover that cyber rep that you have in your agreement, but we will only do it insofar as it is also a claim under your cyber coverage, and we will only pay out under our policy once that cyber program has been exhausted. So in essence, what it wound up being is that you had a double trigger. I spoke earlier about how cyber insurance and a cyber rep are not coterminous. There can be a claim under a cyber policy that is not a breach of a rep, and vice versa. You can have a breach of a rep that is not a claim under a cyber policy. By combining it with this concept of excess and no broader, it means you have a double trigger. Not only does it have to be a claim under the cyber policy, it also has to be a breach of the rep. Or put another way, not only does it have to be a breach of the rep, but then it also has to be a claim under the cyber policy, and that cyber policy needs to be exhausted before the carrier will respond to a claim. Turning to what I also said about some industries are still difficult. Industries that really have a lot of PII are still going to be looked at warily by insurers. So, for example, we were recently involved in a transaction involving hospital systems. that's an area where they're either going to have a very high bar in terms of what they're willing to cover, or as we saw in that transaction, a lot of markets will say, we're not even willing to cover cyber. It is just too large of an area of concern for us. But happily for our clients, those situations are far rarer today than they've ever been before.
Yeah, well, that's certainly good news on the market, Joe. Thanks for that overview. I guess the backside of these policies, claims that do arise, what trends are you seeing in claims under RWI, and what can we learn from that as we navigate the deal environment coming up in front of us?
It's a great question, Steve. What we're seeing is it's been relatively stable over the last number of years, that the two areas that result in the most claims are the financial statements and the tax reps. Now, those are interesting reps to talk about because a lot of breaches of another rep is going to have an impact on tax and is going to have an impact on financial services. But I think the question here is, what are carriers seeing in terms of cyber claims? And we're seeing trends that is an area of concern. And it's an area of concern both because they are seeing claims in this area, but also because the cost of defending these claims and settling these claims, but more defending even than settling, is going up. And so those claims are more costly. And then especially if they might flow through a financial statements rep or a tax rep.
Interesting. Great information, guys. Certainly great insights into cyber risk, cyber insurance, and the intersection with RWI and what you're seeing in the marketplace. So any final thoughts on the topic?
Yeah, I would just leave you with that the due diligence upfront work on any deal for cybersecurity, the control environment. I can't emphasize how important that is, because even the companies with the highest of standards have surprises, and they can be costly. It can affect valuation. It can affect ongoing operations. Cyber events can affect your reputation. So I would leave you with the due diligence is critical in any M&A transaction around cyber. And then, as we discussed earlier, the proper type of insurances that you can look towards to surround and help protect in the event something were to happen. So thank you.
Yeah, you're welcome, John. And Joe, final thoughts?
Yes, a couple of things that I'd like to share before we go our separate ways. The first is that talking about that relationship between reps and warranties insurance and cyber insurance. The cyber insurance is more than a nice to have with reps and warranties insurance. Often we're asked, well, why do I need to buy that tail that John is telling me that I need when I have cyber insurance? And we already talked about the one reason that, in fact, they are not covering the exact same thing. The other and more practical is because the insurer is going to require it, just as they require the due diligence of the cyber area before they're going to be willing to cover that exposure. They're also going to be looking to have that first line of defense of the cyber coverage. So it is more than just nice to have in these transactions. The other parting thought that I would have is that while at this moment in the life of reps and warranties, the market, it's pretty easy to get coverage for cyber for most transactions. That hasn't always been the way. Exclusions for cyber, the excess and no broader concept have been regular features in the landscape of reps and warranties insurance. They are not here now. Hopefully, because the markets have learned more about how to understand these risks. But in all probability, a large part of it is the market dynamics have made it so that if a carrier is looking for an exclusion under cyber, we're going to be able to find another market that is willing to cover it. That may not be the case in the years to come when we have a different dynamic in the market, when carriers may be in a better position to dictate terms to insurers and prospective insurers. Given that, and given the fact that even if you do have a successful cyber claim under a reps policy, it does not solve all of the problems that John has talked about. It may not fully cover the economic loss, and it certainly isn't going to take care of any reputational damage that has been covered, or that, I'm sorry, has arisen out of such a loss. So it is important that as our M&A professionals are planning for transactions, that they really think about the cyber profile, that they conduct the types of due diligence that John and I have been talking about, and really prepare themselves. In parting, the best claim you can have is the claim that you stop before it ever happens.
Yeah, great parting thoughts from both of you, and really a great discussion on cyber insurance, RWI, and all those issues around M&A transactions. So really appreciate the two of you joining us, and look forward to you stopping by sometime soon.
Thank you, Steve.
Thanks.
And to our audience, thanks for listening in to this, very informative discussion on this topic. A lot to cover here and a lot of important risks to look at as you're contemplating that next deal. So appreciate you joining us on the Capital Table, everyone. Again, Steve Brady, partner with Witham, leading our transaction practice. We appreciate your time listening in. Thanks, everyone.
You've been listening to the Capital Table. For more information, please visit witham.com. Thank you for listening.